Great and beautiful morning to you, wherever you are joining me at this hour. Welcome to 237 edition of Investdata Trading Academy Live with Ambrose. As usual, we look at the market from top to bottom, and we are already seeing that the matured market, as we speak this morning, has also opened on a mixed trend. We are seeing some market in green, some are in red. And this morning, I will tell you, majority of the market are slightly what in the south direction as a result of fear of this banking failure that has kind of affected many matured market in terms of sentiment, and that also shaking the sector as we speak now. Yes, we have seen some regional banks and other banks in this domain trying to to show sign of distress, but the government and central bank of this environment are not sleeping. In US alone, over $30 billion have been set aside for any kind of that, any kind of news of any bank, looking at it just to protect investors and the depositors of this bank. Yes, it is not a good omen for this market across the globe, and I will tell you, this has also dampened investors' the sentiment in this market because all investors are in the market to make money, and when the major sector of the economy that drive growth and the development is shaking, I tell you, it has a speed over other sector in that environment, and this is why we are seeing all this oscillation in terms of market sentiment, and this shows you that the market is driven by what? By investors' perception and what? And expectation. And if you see that the market is not looking the way you expect, that's why you are seeing this movement. And I will tell you that volatility has increased these days tremendously. That most investors in the market are confused. They don't know what to do at this time, just because of what this volatility. But I tell you in this class that volatility is what creates opportunity for you to buy low and say, which I know most of you know. But it takes your able eye of being a technical trader for you to be able to capture this moves and know when to jump in and when to jump. Like I said, the perception of the sentiment in the market is very, very key. And that is why we're able to see that sentiment just change positively. You know exactly when to buy. And whenever we are seeing the sentiment is going on the other side, on the start world, and also you have your stop loss. Like I always say that every trader, no matter the instrument you are trading, if you are in this class, I have emphasized it and I will still repeat it that you must have a goal. It's that goal that determines what your plan, and that plan will come what will come with your entry strategy and exit strategy, which comes with what? With your buy range, stop loss, profit target, and what and exit what strategy. And when you are entering, you know why you are buying the stock. The factors that attracted you to the stock, you have seen them, they are still very important. And if you are in our class here that we always play technical, you have seen the momentum behind that stock before you enter, and also you know your timing already, and also where the trend is going. If the trend is going in the direction that you expect it to go. Because every investor want to see trend going in the up direction, which is your direction. You want to see how far it will go, and also if it's coming from a support level, breaking out a new support level, or breaking out a new resistance level, or touching the support level and bouncing back. You want to know what is happening and what is the volume behind this. This is why it's very, very key. Even when you have your goal to trade, you need to also look at your what, where is the direction of the market. It's very, very key. Call it the heartbeat of the market. Where's the market direction? You need to know. After knowing that direction, you need to know individual stock you want to buy and what is happening in that sector. As we speak now, not that many banks in these sectors, the banking sector, are bad, but because of one news, because they're in the same industry, the same sector, you can see how it can affect all. And that's why you, as a trader, you need to see where is the sentiment moving for the sector, and where is the what indicator, the index of that company, using your chart to see where it's heading. Is it a market, a sector that is having positive sentiment, or is there having a positive news that will support the sentiment? These are the things we are looking at. Yes, we know that banks are the engine of any economy, but now that information that is coming is contrary to that expectation, you can see that despite that the banks are attractive, and also we expect that the continued high rate we have seen, from last year from across the globe, will also impact this bank. Put initially all the banks results we have seen that before this crisis, I think that the results have been impressive because of what we have seen. Their gross earnings, another profit after tax. Even we have seen that their assets has also improved because of what they are making money. But this news of bank failure in this mature economy has dampened that positive sentiment. Now everyone is afraid because what affect this news is going to trickle both the bad and the good in that sector. For that, you as a trader, you know why you are in particular store, you know the time for you to hold cash, you know the time for you also to jump in, you know the time for you to take profit. If you are in a store that you know that everything is is intact, but sentiment in that sector is also pulling the back, that means it's a matter of time. It's just a short time it will ban. That means in that kind of situation, you don't jump out because of that, because you know that once the news also come to under control, they're going to ban, and those are the ones that will lead the rebound. Because those that are strong and there's no negative news on them, that ones that will lead what the rebound, even if you don't in that sector or rebound in the general market. That's why you must know what why you are in the stock and what attracted you, and that is how to invest in this market, no matter what it is. We are seeing that volatility both in the commodity market, in the fixed, in the treasury market, the fixed income market. We are seeing it in stock, in futures, even cryptocurrency. The volatility is on high now. First of all, it's on the extreme. Let me use that language, on the extreme. But this extreme also provide you opportunity to buy low, especially if you are what, as I said, that technical trader. That means you don't need to panic. As we speak now, I told you earlier that this market across the globe are what are missed, and factor driving them are what this fear of this banking failure, which I told you earlier. And on that also, we're looking at to see the outcome of what the Fed meeting that is coming tomorrow and next tomorrow, and these are the things driving the market, and also the decision that the ECB take, which is the European Central Bank take last week, okay, hiking their rate, despite the signal of the inflation rate are rising now, and also what is happening in the financial sector. They went ahead to predict. These are what the people are playing around that. Yes, because ECB has done 50 basic points, that Fed is also likely to do tomorrow and next. And if you come back home here today, we already had our MPC meeting that kick off by 10 o'clock. Till tomorrow, by 2 or 4 to get a communication for that meeting. What is the position are they taking? Are they going to follow the hawkish nature or stance they have taken before now? Because don't forget that since May last year today, we have seen that rate rise can continue, and that have not affected our inflation, only just because of slowdown we saw in the month of February, that we saw that inflation just slide down, despite the one that happened in December before rebounding was in the month of January. You can see that we expect that at this time, this meeting they are having today, yes, they are the ones that shape the economy with all this fund flow because of interest rate to manage and stabilize price. We expect that, yes, we have seen already that the economy has contracted for the month of February, on the strength of the Stanbic IBTC report on what the potential manager index at 44.7. And also, we have seen that inflation did not, will not see a spike in inflation, rather, we'll see kind of a slide there, and each, just inch up by 0.09. Yes, we know that the crash price follow the month of February was also part of it. And now that election has come and gone, and fear of election spending and also has come and gone, we want to see what the CPN will be doing in this, civil multiple will be today, tomorrow. Yes, election has gone. They've done the naira swap before coming back. We know that money they call out of the system was at about almost 2.3 or 2 trillion down to the banking stopper. How they want to take it back gradually to the system to drive the economy, or if we want to go into cashless economy, are the banks and also central bank kind of working on what infrastructure to drive this? How is the old women and those in the rural area going to benefit? I believe that, and all we need all this to come from this NPC meeting, and also because of this news of bank failure that is becoming rampant in the material economy, it is time for also the central bank of Nigeria to tell us the state of our banks in Nigeria. Yes, we have seen their capital adequacy, they are okay, which most of us we have seen their balance sheet, they are okay, but we need to know how systematic strong they are now, because I tell you, anything that happens to any bank in Nigeria is going to be similar to other banks. We need them to come out to tell us where the, but on the strength of the numbers we are seeing, on the strength of the ratios that that tell us whether a bank is sick or not, most of these banks in the market, we have not seen anyone shaking. They are becoming stronger. The adequacy, capital adequacy is one, cash ratio fine. That means our banks are good. But we need the regulator, the overseer of this sector, to tell us what is happening in that sector, so that it will give investors a kind of calm and at the same time confidence for us to invest them. We know that, yes, figure don't lie, these banks are posting their number, but the regulator that have insider information, or the regulator that know everything, because they are the ones that watch their back and see what is happening, they should tell us the public what is happening. Because you can see that for Fed, they've noticed that, yes, the automatically they've set about 30 billion to kind of intervene. Here, what are they doing? Is there any sign that they were setting aside any money, or because we see that all the rate hikes also have moved some of the bank's money toward to the comfort because of what their cash ratio adjustment. These are the things we want to hear from the federal bank that will give us the state of our bank. But as to speak now, like as I'm saying earlier, that was able to give us the position of our banking sector, the operation, and the new guideline of the open bank they are coming with. These are the things that also we have seen that most of the license of these banks, some of them are going to the holding companies. We know what the state of them going to. The ones that are going to holding company. What have they done with the holding company? What's the attraction? No, we want to hear all this. When they tell us why all this is happening, then it will also help. But we analysts or investors, we know the difference between the standalone banks and those that are holdco. We know before now that Universal Bank has been the one that helped the bank after Soludo's bank capitalization. We saw how the banks supported the economy and also the market because the liquidity was there. Now that the banks are indirectly going back to what universal license, despite that yes, it's a holding company now, and now they have a license for the banking and a management director for the banking, and which is not as before because there's a little change here now. But the cost of running this one, how is it telling on their balance sheet? How is it telling on on the operation? What is the liability of other companies that are in that group? How is it affecting? Are they bringing results differently, or they are bringing a collective result as a group? No, these are the things they know the work prevision so that the investor will know why they are investing. And those companies that are taking advantage of investing in other sectors that to support the banking, their holding company is also good. And that is what we saw that impacted bank after Soludo bank reform. For me, this is a good thing for investors to also look at because this is the time, because this is our hard-earned money. Not the time to play with it, especially now that we're seeing that election season has come and gone. We expect to see a direction where the economy is going in the next 4 years, and it's for us to take advantage of that by what buying the right stock, by knowing the right stock to buy. And that is why the common master class is very, very important for everyone that is in this class and those that are going to listen later. That you need to know it's the time for you, those that have taken profit in some of their position, for you to hold your cash and watch where are we going so that you can see this cash to take position ahead of what you expected that post-election economy, you expected reform to come in the oil sector by removing of subsidy, who sector benefit from it. You need to strategize and be in position before all this because every investment is against the future because past performance of any company does not guarantee the future. But if you can see from here other policy direction where they are going to guide you what to do at this time because you are investing in the future, you are not looking at what the past. Past is good to guide you, but look at what will support this company performance into the future, which area is going to benefit from the reform that is coming, the new government, which area is going to target. And that is why in that master class, I told you earlier that we have one of the experts going to take us on what on sector and industry and also government policy, how it's going to affect because we expect to see a policy shift anyhow to come from the incoming government and also how it's going to benefit the economy and you and I as investors, how can we key into it on time? As I said, for those that are taking profit, yes, you need to hold your cash to watch, to know the right place. So that's why you must make our time, go and open your calendar now, know your itinerary and know that first of April is a D-day that you need to be in the class. Yes, it's a whole day from your house, comfort of your home, you join so that at the end of the day you get the stock picked by these analysts, expertise, professional in the market. Then Investdata will now give you our own 5 stocks that is hot one that you position for what the next 90 days and also look to see what will happen in between May and July, where we expect to see government settling down coming in and how you can take advantage. Like I said, this masterclass is going to be beyond just the 90 days because you're going to see factors that will direct why once you start keying in. And also don't forget that research has shown and the data have shown that the month of April and the second quarter is where serious investor, then design investor, smart investor, successful investor position or traders position for the year. And already we have seen numbers of this coming in. What are we heading to? Because another financial for the new year is already coming. If you are going to position for the new financial year, you need to be in those stores. That's why you must make that time, whatever habits you are, to be in the class, so that at the end of the day, you are investing with knowledge, you are investing with confidence, because it is learning that brings that knowledge. And also, once you are seeing that what you are learning is reflecting on what on your bottom line, it's a boost for you also to learn more. Because I'll tell you, in the school of wealth, creation, there's no graduation. I tell you, Korabulet is still learning today. All those, all these big names abroad, even our billionaires in Nigeria are still learning how to invest. Why? Because they do other things to make sure that their investment, where their major holders are still thriving, and they keep because they want to remain billionaires And those stocks were there. How can you take advantage of all this information? It will be shared, at the comment the master class. We look forward to see you there. And that's why I said you must make that time, to be there. And also those that have watched the last video I just posted over the weekend, just to guide you, it just does an aspect to what you're going to see, because I'm telling you, data has been collected by different words, presenters or experts are going to speak in this class, so that at the end of the day, it will be a class to work to start the new expectation with the new government. Because I tell you, post-election rally is what I believe that it has the way of what shaping the market, and we want to position for it as we speak. Yes, as we speak now, US market is in red. Down, we're seeing that two of the indicators are in red, and also if you look at what is happening in the Europe market now, as we speak now, Europe market open Monday trading sharply lower on Monday, with banking sector hard hit on the wave and the week of consolidation, of Swiss bank and others, leading to the UBS and the credit. These are the things that are also open for that. As I told you earlier, what is happening in that domain in terms of what banking failure and all that, that is shaping. But down here, we have seen that our banks are looking strong. They are rebounding in terms of price. If you look at Asia market as we speak now, Asia market is poorly mixed. On the fear of the same banking issue that it rebounded last Friday, but this morning they are saying that gain is like trying to work, trying to pull back now from the gain they recovered they recorded on Friday. Yeah, despite that most of this market for last week closed in red, but we saw a rebound in the last two trading days of last week. But as we speak this morning, these gains are what are dashed now because of what this fear of the banking sector as the banks are trying to consolidate, and they were seeing weak consolidation in most of the banks. These are the things that also, and also as all eyes are on I've said earlier, Fed meeting that is holding tomorrow and next, that also give investors a clear direction what they are trying to do. Because initially, as a plan of 50 basic points from Fed, but after seeing what has happened to these banks in the US, and also after meeting with the Congress, then we expect to see if probably they go to 25. But I believe that what we saw in Bank of Union Bank might likely repeat itself, where they increase their own by 50 basic points. Also, Bank of England also is expected to have their meeting. Let's also see what they are going to come out with. And the Swiss National Bank also is likely also to meet this Thursday. And let's see what we're going to see this week. Whether are they going to also increase? Because we have seen that's why they're slowing down inflation. What the ECB did, the European Central Bank, by increasing they are raised by 50 billion despite the shaking banking system, despite they said it's strong. But those turmoil we are seeing in the country banking system does not affect them, tell them to slow down. Says that they know that their banks are stronger. That's why they are not looking that way. That means they've seen that all other indicators are alright before they maintain that big hike of 50 basis point. But if you look at the oil price, oil sector or oil price, I think that even Monday morning we have seen oil pulling back to around the $71.28 as we speak, and this to start the week. Yes, last week oil struggled, but this month we are seeing that sell-off has hit that sector again, or that commodity or asset as we speak. Concern on what on ongoing banking crisis would also further, if it's not taken, might trigger a lower economic activities. But despite that, the China demand for oil is increased because we are seeing a positive or a mixed outlook for China. You can see that the fear of ongoing bank crisis has also impacted the negative on oil price. But don't forget that also oil price remaining relatively low is a plus for the global economy. But what is happening in Russia and Ukraine is also a concern. But it's a good news that we are seeing that China president is trying to move to visit Russia to also to see how ceasefire can be discussed, and let's move the economy. If all the leaders in the matured economy are thinking that way, I think it's not the time for them to be warming up for war, also using their resources to buy arms and ammunition. I know that the sectors operating that sector are making money. The company operating that defense, all those raw material are making money. But I think on the expense of the economy, let's all this mature the economy, focus the economy and make sure that things are happening right, so that at the end of the day, we won't just take another war that will affect the global economy and the world at the end. Let's think twice as leaders, and I urge and the move that the US China leader is making to visit China, to visit Russia, from China, that would be a good one. And I pray that they discuss something positive, that even all the green they did, they are green. The green, if I see that to extend by 60 days 120 days. These are going back, going front will not help the economy. It's good that oil price is coming down, that it will impact positively on inflation and all other economy. Price will come down. We agree, but we need stability so that investors can plan, and that will drive growth. And war will be a thing of past in this around the globe. This is what we are expecting to see at the end of the day. And before finally, go to the local market here. We're speaking about Asia. African market is equally mixed, and also if you look at what is happening in US NGS market today, NGS market, I'll tell you, has opened in green, but on a great volatility we are seeing there. This morning, this stock has opened at such a size of gaining almost no, no, almost touching 100 basis points today before pulling back to around 80 now to speak. But let's look at what the market is doing right away now, so that we know the position before we go to the chart. So I know that yes, our time investment. We have time tomorrow to look at the result that came from Stanbic IBTC and the custodian, custodian investment. This one, as we speak, we saw market gain almost 100 basis points before coming down to trade at 54,945.334. That is, market is up now just by 29.96%. That is, market is up by 0.04% in the green. But if you look at the market rate positive, as a good one, we're having about almost 11 gainers against just against 5 losers as we speak now. And we're seeing, if you look at the loser chart, we're seeing one pick here. One pick is this Coronation Insurance now. We're seeing a Livestock, we're seeing a Sterling Bank and NB, Nigeria Brewery, and Transcorp are the top 5 now. If you look at the gainers that has 10 gainers, we're seeing University Press top in that chart, followed by Custodian Investment. You can see Chams and also Mutual Benefit and UPDC back to 1 naira again after the last week pullback. This is a good one for the market. We said the life of the banking stock coming back again this morning after we've seen what happened last week. Like I mentioned, the result that came from Stanbic, we'll be discussing them tomorrow because of our time. But it's a good one, and their final dividends is 2 naira plus interim of 1 naira. Tomorrow, we look at the data. The data, the up line are in green, bottom line, but we'll look at them tomorrow because of our time. You can look at the chart. Then for that of custodian was also, they are paying a fine of 55 kobo. That means altogether 65 kobo for a stock that's selling around below 60 kobo as at price. But this morning, it has gone as high as 6 naira 10 kobo. That's almost like 5 to 6% up now. Good. Let's see how far market will react to this number. This is the state of the market. But if we look at in terms of volume, Transport is still in volume 9.2 million share traded around 1 naira 27 kobo. Zenith Bank also has come back to around before I thought almost 24 naira 95 kobo as we speak, but now it's been 24 naira 70 kobo with a 3.77 million share traded. UBA trading about 2.8 million share at 8 naira 10 kobo. Access Bank is doing 8 naira 60 kobo at 2 naira at 2.55 million share traded. Livestock is 1 naira 3 kobo flat, and also it's been 2.3 million share traded so far. Yes, Sleep Critical also coming back to almost 25 naira 20 kobo this morning from below 25 naira last week, which is a good one for the bank stock. Yes, I tell you, as we have seen first audited account from Stanbic, we expect that between now and end of the month 31st, we're going to see more bank results hitting the market, and that will be very good for the market. And I expect that investors that are for dividend income took advantage of the pullback we saw in those banking stock on last week. As I was saying in this class, that is just a contagious fear that our banks are good. Once the results are seen, we can see another insight. Even before now, we have seen the unaudited account from Stanbic shows where they are going, and the audited account also maintain that direction. That we expect to see the life of Stanbic, Fidelity, FCMB, ETI, UBA, Access, Zenith Bank, GT Code, and other Sterling Bank. These numbers are good. We have seen the unaudited account, but for those the figures, we expect that their numbers also will be good because on the strength. But those figures that are already in a holding company like Stanbic IBTC, we expect a better number because we have seen their work, their queue today. Even they've not reached their pay for who to give that. Your audited account will tell us their position as we speak. On that, there's no cause for alarm. Yes, quick one. We'll come back to the chart. If you look at our chart here, before I bring up any index, looking at the index action alone, you can see that after the pullback yesterday and today, Friday, sorry, and today, that the market is trying to stabilize at this point, trying to trend. The market is resisting further decline, which is good. because I'll tell you that our next support before was around 54. Looking at 54, 400, 54, 400 and 450 was the next place we're looking at the strong support level that market will get to. But now it's already at around the 54.90 something. Let's wait. But the next strong support level is what I just told you now. But in reversal from here, we both stay good. But if we see more strength here and results come and this is a bit expectation, but I'll say when the market touches 54,457, that will when the market gather enough strength. When it come up, might surpass the way it had touched this 55,984 that it tested. But once it will see, but for me, there's no cause for alarm because we're expected to see more audited account, than what we have seen ever. We have seen about getting to 18 now. We expect to spend like about 40 to 50 companies to release the results on the account from different sectors, ranging from the agriculture to oil sector to banking to service and also to insurance and the sector that we know the result have come fully moved from them is what the industrial goods where we have seen Dangote cement, we have seen Boss cement and Waco. But other sector we are just see few results there. We are going to see more of this result when after the MPC meeting today, tomorrow, or if some are still going to come today. I tell you that the outcome will be a plus. We have seen the missed interest rate for treasury rate for last week on Wednesday. But let's see what outcome of this outcome of the meeting today, tomorrow. Like I said earlier in this class, because of where we are coming from, we don't expect them to see to hike a rate, but because of the hot nature of central banks since May, and also what the trend was saying in market economy, despite seeing a slowdown in the inflation, they went ahead to hike the rate. You might see a moderate hike either by 25 or 50, but I expect that the right thing to do at this time, because of the state of the economy, is to leave the rate or change to what and see what happens between the next MPC meeting that will come in May. That is where the calculation of adjustment, and that May will be the month of handover by the present government to the incoming government. These are the things we expect, but let's keep about. For those that are dividend income investors, not to panic. Like I said earlier, for those that are investing in the mature economy, with what is happening in those banks there and driving the market, I would advise those there to also hold cash. But in a market here, for those that have taken profit, the profit you have taken, don't jump back into the market now. Hold that your cash here if you are taking profit. For those that are in position, don't panic. But if you are taking profit, as you said, hold to wait for the outcome of the work of the master class on the 1st of April, so that you can start position immediately before that seeing results for Q1 in the month of that April towards the second week. Enter early because the class is holding on what on the 1st of April. You're able to position before start seeing the Q1 number hitting the market. Good sector is going to be good sector also expect that earnings that their full year will support after even when they release their Q1. It's all we're going to discuss in the class for start today on the 1st of on the 1st of April. Yes, because of our time, let's quickly draw the chart. Okay, let me look at few stock now. For then we can draw the chart next week. Then you know the indicators I want to. But let me look at the GT code. What is happening in that stock today this morning? Now we see also the momentum in UCAP. Is this sustainable after seeing a rebound on Friday? Is that rebound? Is this sustainable this morning? I want to look at it. Here you can see that this morning the candlestick is forming on the day chart. You can see that it has gone up, gone down. You can see that demand and supply, buyers and sellers are fighting for dominance as we speak now. You can see that where the chart go for me, the sign of reversal in up direction. I want to see at the end of the day where to be. That is why let me quickly call my T line because I need that T line to see what is doing here. Let me quickly bring only the T line in this chart. Right, it will help every one of us in this class to quickly look at what I'm doing now. I know that our time is fast, man, but before the system will cut off. Let's look at two stop. Look up and this and this yes, you can see where our blue line is. It's almost tested it this morning now before coming back. I think for the day because market was like I said, our market is so volatile this morning. It has come as high as almost 25 naira 20 people this morning before coming back again to sell at that 24.90 now. Let's see what's going to close today. You can see that tested the T line. Once you break it out, that is a strong reversal that you also should watch as an investor. Yes, that is for the chart. Let's look at 1 hour chart. On the 1 hour chart, it has crossed it for me. It's a good one. That means something is coming from we are seeing a momentum for GT code. That's a good one. Let's look at UCAP. Let's look at UCAP. Sorry. UCAP. So that's what I adjusted now. Let's look at what is happening there. I move our position in UCAP. This 1 hour chart for you can see that the 1 hour chart you can cross after marking that you can see that where it is now. This 1 hour chart was taken for me is a good one. Look at this still above the T line. But then look at one a day chart. What is happening to UCAP now? We know. I see that it's still coming back, to touch the T line. I've not gotten there. But it's a good one. But as we speak now, I see that it's still in red. It does not sustain that positive trend, but again this morning, I think that it's also pulling back a little again. But let's wait and see what it will do. But I can see there's still buy position in the stock. Let's wait and see at the end of the day. Finally, look at Zenith Bank before we leave here for today. Tomorrow, like I said, we'll be looking at the fundamentals of the store that are related to their results. To look at their numbers. Zenith Bank, I like the building. It's a building. So you can see that the building has tested the T line again. Once you cross it up, for those that enter Zenith Bank for the investor, good one. For we trader, a buy will be when it cross this level. Like I said, for those that are taking profit in Zenith Bank at this point, by holding cash, still hold your cash. After the master class on the 1st, you can now know what to do. Because in thick class, we are not interested in dividend. But now they've not announced the dividend, can still hold on. If we cross here, you can take advantage after the class to still partake in the dividend and also wait for the Q1 number that will come. The Q1 number is a management account. It comes faster than the portrait account that will know that delay in half year and a full year. That means once we see the breakout here for traders who have been technically of jumping in. For those that are long-term investor, income investor, if you are in Unit Bank, you need to panic. I've said it in one of these classes that we expect a good dividend from them. That also guide us on what to do for Zenith Bank. On this note, I will say close the class here. I look forward to see you tomorrow. That tomorrow, we're talking of the stuff for the week. Like I said, for those that are in a premium class, I said we are watching our position. For those new opportunity now for traders, we'll today hold on. For all investors that have stock to buy, which are what are those that good stock in our premium class sites. When you go there, you can see those dividend paying stock. They are there already. Those defensive stock, those local stock, all of them are classified there and they are there. Go ahead and pick them for dividend income. Also, those for defensive, they're also in that category. When you log in, they're already there. But for trading, we're still watching to see what happens between now and the coming masterclass on April 1st, where we can start taking reposition for the new financial year, and also that also guide us to know where we are going for the year. We expect that things, the way it's going, despite the volatility we're seeing, there are things that are pointing to what on the long to medium run, we're seeing a positive market, despite we're seeing a mixed trend on the short run. For those that are looking medium and long term, we need to guide you and take position on time so that when things start unfolding, you and I will be smiling. But after this, the next government, we expect to see a change in expectation, a change, in economic managers. This is going to bring that change also. The reset I've been telling you about last year, that reset is already underway, which I believe are going to touch both the economy and the political environment and also the financial market at the end of the day. On this note, I say thank you. See you tomorrow. Bye.